A look at the energy market action. Oil stocks were rallying OPEC Plus's decision to boost production by 400,000 barrels a day despite Omicron. Let's grease up the oil trade as we kick off 2022 with Fast Money friend Paul Sankey, lead analyst at Sankey Research. Paul, great to have you with us.
Hi, Melissa. Happy New Year.
Of course, you'd be the lead analyst at Sankey Research. Paul, you think oil could go 80 to 120. 120 is a magic number. That's the point at which there's demand destruction all the way up until 120?
Yeah, I mean, around that level, we're just basically talking about a new range for oil because demand is so strong, notwithstanding the fact that we're breaking into the $80, which is obviously the lower end of the range. But you know, I think we're out of that 40 to 80 range is the point that we obviously went through at the low in 2020, where we averaged just 40 for that dreadful year of COVID, full COVID.
So what kind of oil company at this point, given last year's tremendous gains and where oil is headed this year, I should say, or at least where you're forecasting it heading, what part of the oil patch do you like the best? Which has the most leverage?
Well, of course, you know, we're not worried about last year's performance because, by goodness, it was a tough journey getting to the lows, you know. So we're talking about the law of small numbers here with the improvement we saw last year. We were the best performing sector in the market. I'm really hopeful that we can do it again this year. And, you know, it just looks good for all of them, basically, because demand is strong without jet fuel really being obviously back to full blast. But at the moment, for example, we've got all-time record U.S. gasoline demand for the time of year. And we've just come off the phone with the CEO of Marathon for my annual refining conference, Marathon Petroleum. You know, you've got only 3 or 4 major refiners left in the U.S., all-time record gasoline demand. You've got absolutely the potential for even more demand this year on a very consolidated sector. So, for example, Marathon Petroleum with $40 billion market cap can buy back $10 billion worth of stock this year. At the same time, I've been listening to you on these EVs. There's just too many of them. There's too much market cap. So our trade is long MPC, Marathon Petroleum, short Rivian, or any of them almost.
Hey, Paul, it's Tim. So that certainly makes a lot of sense in the valuation discussion we were having, and kind of agree with you there. I want to talk about how the energy equities are now outperforming the price of the underlying. We weren't seeing this last year. We're certainly seeing underperformance in oil services. It's not a linear relationship. You're talking to the smartest oil investors in the world every day. Why is that happening now?
Yeah, it's interesting. Quite a few of the major shops have actually declared energy as the best performing sector of the coming year, that is of 2022. It's not a linear relationship, basically, because once you get up to these levels, it's all free cash flow and free cash flow yield. And if you believe in the capital discipline, you're just exploding the cash return levels here. That's why I think that the sector can still go up, you know, 20, 25, 30%. At the moment, if you look at Chevron and Exxon as big cap examples, they're by far the highest free cash flow yield stocks of the top 30 or so stocks in the S&P. And we're talking here about 10 to 15% free cash flow yields at more like a $60 to $65 range. Every dollar above that is just pure additional juice. And we've already just had Exxon end the year with a positive profit outlook for Q4. So I think all the EPS numbers going up, and you know, we're seeing some of these story stocks with no real cash return behind them is becoming really problematic in a rising interest rate environment.
So long Marathon, short Rivian. Well, we'll keep you honest on that one, Paul. It's an interesting pairs trade. Thanks for joining us. Good to see you.
Thanks.
Paul Sankey,
Melissa.
Sankey Research. Are you with Paul on that trade, guy?
Yes. And look, I incorrectly thought oil would be triple digits by the end of last year, 2021. That obviously didn't happen, but I think it's bound to happen. I think it's going to happen early this year. And MPC, Marathon Petroleum, they're going to earn $4 a share. And you're talking about earnings growth. Well, they got it. And he just mentioned how pristine their balance sheet is and their ability to buy back stock. So I think there's a real good chance this stock takes out the highs I think we made in 2018 of $85 or so. So I'm with Paul. Listen, I can't speak on the Rivian short side of things, but I think I'm with him on the MPC long.
Karen, O was the O in zombie, correct?
Right. Yes, for OIH. I mean, really, it was just to have energy exposure. I know you didn't ask me about his trade, but I really like it for 2 reasons. One, we've seen pendulums swing too far, right? So oil, the pendulum swung way too far. And I think we're only, heading back. It's nowhere near back. So we think we could see the pendulum swing the other way. And the same for Rivian. The pendulum, I think, swung way too far, right out of the gate. So if the pendulum swings back, you have two pendulums swinging, that would be a great trade.